Welcome to the Daily Drawdown, where SpaceX's IPO is resetting the market's risk map. One deal just hit almost every major market theme at once: IPO structure, passive flows, options, chips, AI infrastructure, and the Fed backdrop. The headline is bigger than the pop. SpaceX may have changed how mega-cap tech comes public, and investors are already gaming the next order effects. SpaceX skipped the usual IPO price range and set one fixed price at $135 a share. That sounds simple, but it matters because it reduced the usual pricing theater, made participation cleaner for retail, and still drew enough demand to cover the book multiple times at that level. The model is more common in Europe, and it also fits Elon Musk's private fundraising style, where he tends to drive terms directly instead of inching through a conventional roadshow script. For the market, the practical takeaway is that a huge tech issuer just proved there may be another path to a smooth debut, especially for companies with brand power and deep narrative support. The company raised about $75 billion against a valuation near $2 trillion, so only a tiny slice of the company actually hit the market. That kind of light float can create a scarcity premium. If there are not many shares available and demand stays heavy, price moves can get exaggerated once early selling clears. That setup gets even more important when index inclusion starts. Once names like MSCI, NASDAQ, and Russell add the stock, passive funds have to buy into a very small free float base. There may also be staggered institutional buying before any eventual S&P path, so this is not just a day one story. The float dynamic can keep mattering well after the opening excitement fades. Options were not available on day one, but the stock met listing requirements and was expected to get options within roughly 2 trading days. That usually expands participation fast. Hedgers come in, speculators come in, and market makers start running the machinery that deepens liquidity. More liquidity sounds stabilizing, but it can also intensify moves. Once options are active, dealer hedging and structured flows can reinforce momentum in either direction. So the next watch point is simple. When options go live, does trading broaden in a healthy way? Or does the float plus derivatives mix make the stock even more violent? A big part of the long-term bull case is not just rockets. Analysts are looking at orbital data centers as a future core business with real relevance in roughly 3 to 4 years. That ties SpaceX directly into AI infrastructure, because if compute starts moving into orbit, launch capacity becomes part of the stack. And SpaceX controls the majority of launch mass to orbit, which gives it near monopoly characteristics if hyperscalers decide they want space-based compute. In plain terms, even if someone else wants to build the data center, SpaceX may still control the deployment bottleneck. That is why the market is willing to stretch on valuation. The IPO added more than $300 billion to Elon Musk's fortune, lifting the value of his SpaceX stake to about $800 billion and putting his total net worth around $1.1 trillion. That figure is large enough to clear the combined GDPs of Sweden, Ireland, and Taiwan, which tells you how extreme the market's future expectations have become. There is another layer here. Musk also holds milestone-linked stock options tied to targets like Mars colonization and large compute capacity. Those awards can push the number much higher if exercised, but they also underline how much of this valuation rests on very ambitious future milestones rather than present cash flow. The broader market message is that investors still have appetite for expensive, story-driven, loss-making tech if the narrative is strong enough. That is a clear read-through for AI-adjacent names like OpenAI or Anthropic if and when they test public markets. After some weak recent offerings, SpaceX's execution is a confidence boost. It suggests the market can still absorb giant valuations when investors see a dominant platform with long-duration upside. The deal also landed alongside renewed interest in chip names, with AMD getting an upgrade tied to its position as a second source in the DPU market. That matters because it hints at a sector rotation inside the AI trade. Some money may be moving away from overheated software stories and back toward hardware and infrastructure. If that rotation sticks, the winners are the companies tied to real compute networking, deployment, and data center build-out rather than just AI branding. Separate from the IPO, markets are also watching Fed Chair Warsh's first meeting very closely. The question is whether his recent hawkish tone reflects real inflation concern or political pressure, and especially whether he leans more on balance sheet policy than outright rate hikes. The base case is still a long hold because hiking into supply shock inflation could make things worse rather than better. So the market driver here may be communication more than action. Traders want to know how Warsh frames the inflation problem and what tool he thinks actually fits it. One more theme worth keeping on the board is the growing talk that SpaceX could eventually merge with Tesla. Analysts like Dan Ives put the odds above 80%, arguing the two are becoming more intertwined through technology, strategy, and Musk's brand. Nothing has happened on that front, but if investors start treating a tie-up as plausible, it adds another layer to how both companies get valued, not as separate stories, but as pieces of a larger transportation and infrastructure platform. The near-term checklist is straightforward. Watch post-IPO trading once early sellers clear. Watch for options to start shaping flow. Watch index inclusion timing. And watch whether hardware names keep attracting money. The bigger picture is that SpaceX did not just price a deal, it tested investor demand for scale, scarcity, AI infrastructure, and pure ambition. And for now, the market said yes. That's the brief from the Daily Drawdown. Stay focused on the flows because the narrative is loud, but the mechanics are doing the real work. This episode was generated by Podkey. Create your own at podkey.fm.